Good morning, everybody. Welcome back to the Schwab Coaching Channel. Our topic at this time is Trader Talk in today's market. And I'm your host, Kevin Horner. I'm joining you from Denver, Colorado. Today, I am pleased to be joined by my friend, fellow Schwab coach, Mr. Ben Watson. Good morning, Ben. It's great to have you here, stepping in for our buddy Brent. How are you today?
I am well, Kevin. It's good to be here with you as well. It's been a little bit since you and I have done something together other than one of our live events, so I'm glad to be here this morning.
I'm glad to have you, Ben. You're absolutely right. We don't get you on Trader Talk as frequently as we'd love to have you, obviously. But then again, we have kind of a wealth of opportunity there with so many coaches to step in. So, we really aren't going to go wrong whenever we have somebody out. We've always got someone good to step in. So thanks for being here. Say hi to everybody there in the chat. Lots of familiar names, of course. We have Cameron May managing the chat discussion today. So please say hey to Cam. He's going to manage to get to questions that Ben and I are unable to get to for you today. Of course, Ben and I will surely keep an eye on things there. We want to hear from you as we work through our discussion. So please feel free to post in there. For the duration of things, we go about 45 minutes in total here, everybody. So let's get to some disclosure detail, and then we'll get into the meat and potatoes of our conversation. So I'll remind you that our discussion here is exclusively informational and educational. We do not make recommendations nor endorsements for any approach or strategy to trading the market. Remember, we talk technical analysis here. Technical analysis is merely a piece of the puzzle. We think it can be complementary in nature to your fundamental approach to research, but we do not encourage you to utilize technical analysis exclusively or as the only means of your research. We do think it should be a piece of the overall puzzle. As far as our conversation here, everybody, Trader Talk is where we review the news in the morning. We look at the broad market trends. We start with a top-down approach, meaning we hit the major indices and then we work our way through sectors and industry groups of note, and then ultimately getting to some stocks that are in the news at some points today. But we're going to try and do that with an evaluation or a view of as many charts as possible. That's where we really want to hit the road running here today. So as we always do, we're going to lead with the S&P 500. And Ben, I got to say, sometimes getting away, this is my first show in about 7-8 days now. Getting away makes it a little easier maybe to see things for what they are. Sometimes we can get a little bogged down by paying attention to the market every single day, every hour, every tick. But Ben, we've improved in the last week in terms of price action, but have we ultimately improved? That's really the question on everyone's mind here. What are your thoughts as to where we reside here in SPX?
Okay, so look, everybody has recency bias, right? Everybody anchors to kind of the most recent big significant event that's happened, whether that's, personal or whether that's in the market, right? And so it would certainly seem from a psychological standpoint that the market is anchored to this correction drawdown, right? The 10% or plus pullback that we've seen. So when we look at what's going on now in relative terms to that drawdown, it seems roughly insignificant, right? But this is a pretty strong rally up off of that support level, number one. And number two, you've got a couple of pretty big gaps to the upside here in that move, and we've got a reclaiming of a couple of pretty significant moving averages here in this particular case, right? And I think that perhaps is maybe the most significant event in the last 2 or 3 days, is that this market, with this little bit of an excursion below, you kind of get this skewed double bottom here, or W type pattern, or flying W, as Pat and I used to call it. Mm-hmm. That now we get this regaining of the 200 period moving average, which is not insignificant, Kev.
No, typically it's not, Ben. You're right. We know the importance of the 200-day moving average. Many traders thought we were going to see us hold up at that level. In fact, we had a really interesting candle back here on the 7th that kind of gave you the impression that things might be okay. And then we had 2 weeks of ugliness following that. Yeah. So it's always easy to be lulled to sleep. Let's try not to do that. Ben, I'm a little intrigued. So we've had about a 4 3/4, almost 5% bounce off of this ultimate low that we hit here on the 13th into the ultimate high as of yesterday. But a couple of things of note here. One, I'm not enthused by the location of the RSI. The RSI running into this level kind of gives us the impression that this is maybe reaching overbought conditions under bearish sentiment. So that's a little bit of a heads up. Number two, yesterday's kind of a doji spinning top, kind of indicative of a lot of indecision, meaning, hey, yeah, we've moved through the 200-day moving average, but have we done anything to confirm that move? And some traders are going to look for today closing above the 200-day, perhaps tomorrow or even more for confirmatory action. Does these tertiary details that we're looking at here cause you give you reasons for pause as we've pushed into this level of potential resistance?
I think it absolutely does, right? So I was on the Schwab Network yesterday. Schwab Network brought to us by Charles Schwab Media Productions, which is a separate but affiliated company. That's our media production company. But I was on the Schwab Network yesterday with Nicole Petalides and Jessica Inskip, and we were talking about kind of this disparity between hard data and soft data. And the hard data is we're above the 200-period moving average here on the S&P 500.
Sure.
The soft data is what's driving this kind of instability or this uncertainty or maybe this equilibrium at this particular point in kind of the wait and see approach. And that is, I think, kind of that expectation either for those kind of longer term or intermediate to longer term bears to look for a reversal at this particular point on this, kind of right here at this 200 period and say, yeah, see, I told you it was a bear flag, right? So they're looking for hard evidence of that. The soft expectation, the soft data expectation is, we've still got some weakening consumer confidence numbers and things like that. The other soft data that's coming into this, that's kind of feeding into this, is the unknown, which is that kind of time horizon just barely over the horizon. It's next Wednesday, as a matter of fact, the April 2nd tariff deadline.
Yep.
Whatever that discrete event horizon might be. And that's creating a little bit more uncertainty in the part of investors saying, well, wait, is this going to change things, right? So much like going into a Fed announcement, something like that has greater portent, I think we see more equilibrium or more indecision, if you will, between now and next Wednesday, as opposed to more solid trending movement. And I think the fact that the RSI has gone sideways is testament to that, Kev.
I think you're right, and it's plenty of reason to pause here, right? I mean, if you think about it from the standpoint of the way we tend to feel about moves like this, it's the recent price action, as you said, the bias that we've had over the last 2-3 sessions, the breakthrough, the white line here where we see 3 out of 4 days just banging our head right on that 57.15 zone and pushing back. Well, then we gap it. Well, now we've got a level we can work against. So let's talk about it from a management, just briefly, Ben, from a management standpoint. If you want to be bullish, no trouble. You have levels against which you can base an exit strategy if things go awry. For a lot of traders, it's that white line probably, maybe down to 5,700 even, Ben. So there's an opportunity from a risk-reward standpoint that bullish traders could be well set up here, even still, if they believe, for example, we have the opportunity to challenge the 50-day moving average, ballparked at around 5,900, for example.
Yeah, absolutely. And Kev, I'll tell you what, I mean, a lot of people are asking, a couple of people are asking the question, in the chat, is this something, this kind of wait and see mode, is this something that, we should be concerned about? Does this change the perspective? And I don't think that it does. I mean, I think we're always kind of in that, what's the next big data event, right?
Mm-hmm.
And we could always make the argument that there's always something out in the future, because the market's a future-looking instrument. There's always something out in the future that could give the market pause. This, I think, perhaps becomes a little bit more significant than others, just because it's been built up and because it does have implications. But at the same time, I gotta think, and I don't know, maybe I'm kind of overthinking this, but I've got to think that at some point the market is already pricing in the anticipation of those impacts to tariffs.
Yes.
And so we're seeing that in this 5% bounce off the bottom.
Yeah, I think that's got a lot to do with it. And also, of course, the softening of the rhetoric, right? It's
Right.
been a little bit, I assume it's been a little more quiet in the last week in terms of headline with tweets, et cetera, right? Suggesting, oh, we're going to do this, we're going to do this, we're going to do this. That's things have softened to that extent. And I think the market has simply taken that cue and used it as a reason to buy up these levels that we've seen. So obviously we need some continuation. As usual, what we talk about on this show is defining confirmation from your specific side of things, everybody. Remember, many of you are a bit more aggressive than others. You might have looked at that first close on Monday over the 200-day moving average as reason to be believing in the SPX, and you might have taken steps to do so. You might have used yesterday's action as a reason to do so. Today, if we get day 3 over the 200-day moving average, more traders are going to gain a little bit more confidence. Doesn't mean it has to hold, but my point is, define that level for you. What is your definition of confirmation? What do you need to have the confidence to put those trades on? And then further, is it confidence to do full positions? Maybe it's only confidence to do partial positions, Ben, because we still may not feel confident enough to go full hog into your trades like you had been.
Oh, Kev, I think you're absolutely correct. I mean, I think from the perspective of do you push all the chips into the table, or do you nibble softly around the edges? I think this is a scenario. And again, this is a situation where I'm not saying this. This is what technical analysis would suggest, that as we see lower volume days, we see lower volatility days, that suggests that institutional retail traders are nibbling more softly at the edges. They may be starting to build positions, but not going in whole hog. I think you're absolutely right.
Yeah, I think that makes a lot of sense. And you know what? That's because they're following a discipline in many cases, Ben. They know that, oh, we've pulled back X percentage. Our model suggests we have to deploy funds, but it doesn't suggest that we have to be more aggressive than our comfort level. So we'll deploy funds, but we're going to do so in smaller amounts at proper levels, and let's see if things stick and kind of move forward from there. Now, Ben, as you look at the NDX here, there's some things that are a little different. The NDX has had a similar bounce, but we're under that 200-day moving average. Obviously, tech been very heavy in the NASDAQ relative to the S&P 500, but a bit more under pressure. And now we've had those last 3 days, nice little gap level above the 20-day, 3 days there, but also not above the 200-day. A little bit more difficult to discern upcoming action here, perhaps.
Yeah, and you got to remember, I mean, where's the leadership in NASDAQ? It's in the MAG 6/MAG 7, right? And so those have been some of, if we're going by just the premise that there's been rotation out of those tech leaders, right? Which there has been. There's been selling pressure in those names that now it may take a little while for that to come back to, kind of rotating back into some of these technology positions. Will money rotate back into them? Likely. I don't know for sure. But you see some of the areas that have been strong, right? Consumer staples, industrials to a certain extent. You're starting to see a little bit of industrials. And again, going along with the questions that are going on in the chat right now, Cameron put out there the comment, and I appreciate that from Cameron, that we got a durable goods orders number this morning that was significantly stronger than expected. And so that becomes kind of that, is there a shift back to some of those kind of core industrial and manufacturing type perspectives? Again, with the thought process going forward that some of that demand and some of that either job creation or industrial production comes back on shore, right?
Yeah, that's one of the things that we're seeing in terms of the resetting of expectations, right, Ben? That's why we're seeing all these adjustments from so many analytical firms talking about their targets for end of year. And I've noted that those targets have been a little more optimistic now in the last week versus how they looked just 10 days ago, for example.
Right.
Because inevitably, price action does a lot to shift sentiment, and we want to try to not allow that to necessarily dictate our approach to trading. I think that's the delicate dance that we do here on a day-to-day basis.
Yep.
All right.
Can,
So
can we look at the Russell 2000 here real
Yes,
quick?
of
I think that's
course.
probably where you're headed next, right?
you got it, man. I'll tell you what, the as our buddy Lee Bull used to say, the skunk at the picnic from time to time. This one has found a couple of interesting spots. You know, we liked that ledge at 2000 from a bounce standpoint. If we're looking at visually the bounce into where we reside today at around 2100, it still has this visual resemblance of a bear flag at this point. I'll draw that in for you, Ben.
Yep.
But again, consistency amongst the indices, all three of them above their 20-day moving averages now for moving on 3 days. So we're seeing a little bit of optimism as it relates to that short-term trend.
Now, I have to say, Kevin, this is the one that kind of confounds me a little bit, simply from the perspective that, you know, we're still seeing a little bit of softness here. Now, that's a rising wedge that you've drawn in there too. I mean, if you want to look at it from that perspective, technically. And a rising wedge is a counter trend move to a longer term downtrend, oftentimes can be leading right into that bearish flag or that bear flag type of perspective, right? A move back down to the 2000 mark wouldn't be outside the realm of technical possibilities given conventional technical analysis perspective, right? Kev, can you do me a favor? Can you overlay on this or do a comparison to the /10Y? And the reason I'm going to put the /10Y, not that we're looking at the 10Y /10Y futures contract as a tradable instrument in this particular case, but as a proxy for interest rates, right? This is 10-year interest rates.
I didn't do that properly, Ben. I'm sorry. Let me, I think I just need to move its location if I'm not mistaken.
Yeah, move it out of volume and then move it up into the upper frame.
Oops. Let's see.
All right, I think, let's see where to go. Oh,
I'm going to have to put that in. There we go. Different location.
No, now you're still down in that lower. Just grab it and drag it up to that upper frame.
I had it in the chart originally, though, and I don't think it showed what I was looking for. There we go.
Okay.
It's a little better.
There we go. Okay.
That makes sense.
So, yeah, that's perfect. That'll work just fine. So you can see what's going on with that kind of intermediate to longer term interest rate, right? And it has been falling somewhat from its absolute high. But as it's been falling, notice what's also been going on with the Russell 2000, which generally is inversely interest rate sensitive, right? Interest rates come down. Those small caps that are interest rate sensitive tend to go higher. Now we're getting a situation where the correlation, which generally is like a -1 correlation, an inverse correlation, is becoming stronger and more of a positive correlation. I think it's like about a 0.8 correlation as opposed to a 1-to-1 correlation, right? So you have interest rates rising and the Russell 2000 rising. That kind of confuses me a little bit from that perspective, right? I'm not quite sure. Any thoughts on that, Kevin?
The only thing I can think of, Ben, is that there's a belief that we have no option in the matter but to get comfortable with rising rates or with higher for longer rates. Yeah. Meaning that we've moved through levels that indicate perhaps that we're not going anytime in the near future back to what we had, which was such an easy policy where it seemed like money was more or less free, right? Access to funds was easy, and there was a lot of liquidity. That seems to be shifting quite a bit here now, Ben, with regard to rates and the ability to see any give back there, because even if I went with exclusive, let me hide this now real quick. Let's go back and
there you go.
Let's just pull up the 10 years, the 10-year look. I mean, I think there's a pretty obvious ledge of support built in, Ben, now that we've captured it, held it, and it's right above 4.1.
Now, that being said, Kev, if we get a break below that 4.1, it's like a 4.112 or 4.12, that's a big head and shoulders reversal. And just looking at the measurement technique, you would say it's probably back down in that kind of mid-3 handle, right?
Wouldn't that be amazing? I just don't see it happening. I mean,
yes and no, right?
Because it or not, does it?
Yeah, I don't know. I mean, you talk about. I mean, the potential is there to whack financials, right? I mean, think about financials, right? Financials are kind of a bifurcated response to this, because when interest rates go down, that generates, especially the 10-year, that generates more mortgage loans, that generates more auto loans, that generates more credit cards being opened. On the other hand, assets under management of those financials take a whack too, because they're not collecting as much on those assets under management. So it's a double-edged sword, isn't it?
It is, and trying to understand exactly what that implies for us as traders gets even more delicate and
For sure.
difficult. And Ben, as I continue to look around here, some of the things that stand out to me are just some reminders of basic technical analysis process.
Right.
We can fall back on the fact that, yes, we've got support here. That ledge I drew in with the white line, that looks like a solid ledge because we've moved aggressively off of it over the last 2 weeks. By the same token, does that mean that we are encouraged by this move, or rather believe that a breakout through those highs is coming? I can't say that at this point. So I feel like, traders are maybe apt to continue to be a little defensive, continue to look for their opportunities to take profits in the short run, because it feels as though highs we may reach are making lower highs relative to prior levels. And instead of giving continuation and breakouts, we might just simply be in a rangy, choppy bit of action as we digest what is happening with us. And of course, the fact is, there's just an immense amount of uncertainty that remains across the board, Ben. And I think that's keeping traders a little bit on their toes and a little unwilling to deploy all their funds.
Here's one more thing to keep in mind, and I think put this on your radar looking forward. Next Monday is April. Actually, next Tuesday is April Fool's Day, right? I mean, that's the 1st of April. Then we're going to be rotating right back into earnings season again because it's a new quarter. And guess where those earnings come home to roost first? It's right here in financials. And so you're going to start to see some of those kind of realities, if not in the results, certainly in the forward guidance coming out of these financials. So I think those are going to be parsed very, very closely, looking at the impacts to kind of the collective impacts to tariffs and all of these other things, policy changes and everything else, playing themselves out in this particular quarter's earnings announcements and guidance.
Well, Ben, yesterday we heard from a few, I think it was KB Homes we heard from, and the home building situation has been downright awful, unfortunately. If we pulled up just the home builders, take a look at how this chart looks. I mean, you can see we've not exactly got a good trend working here. This is the home builder index here on the Dow Jones side of things, everybody, well below the 50-day moving average still, rather, for, my goodness, back to October, this had already rolled over. There's been inklings. I mean, this has been a canary that we could have been paying attention to. I've certainly been talking about it a bit. But Ben, this does not necessarily bode well for financials if you think about it from the standpoint what you just laid out for us.
Yeah, absolutely. It doesn't. I mean, it certainly doesn't, given the fact that there's an expectation we're seeing. But there are other factors at work here, right? I mean, again, the home builders. Look, this rollover was starting to happen prior to any policy change or administration change. You were starting to see the home builders topping out. I mean, this is a lot of that has to do with interest rates and so forth. But and I'll tell you what, I mean, so Zinc 650 just pointed out, you've got an RSI on there. You got the home builders, the trend line of the stock itself, the price of this index itself moving down, right? And look at the lower lows that this has been creating. But look at this giant, I mean, literally giant, multi-month bullish divergence going on here.
Yep. Yeah, it's a great call out. I'm glad you mentioned it because, one final note as it relates just to technicals and trend analysis, Ben, one of the first instances where traders might start to get a little more comfy is when bad news starts to be digested favorably. Oh, sure. We've gone too far. This is bad, but it only confirms what we've expected. And you called it out a little bit ago. The market's always about 6 to 9 months in advance of itself, right? Price action, 6 to 9 months in advance of data commonly. So perhaps we're seeing, the foothold being established here on home builders. That could be a turning point, but it's far too early to call that. I think a lot of traders are going to feel better if we get back above that 50-day moving average, which we've not seen for nearly 6 months.
100%. Are you 100% agree with it? One thing I want to mention about this, and this is in response to kind of this general idea and the term that I hate probably more than anything else, and that is smart money versus dumb money. That is absolutely ridiculous, right?
Agreed.
Because who says that institutions are smarter than retail traders? Retail traders, I would argue, given the tools that we have now, are probably, if you were going to call them smart money versus dumb money, retail traders are as smart and as nimble and as efficient as any institutional trader. In fact, you have a lot more advantages, I think, in that particular case as a retail trader. But what this suggests is that money in general, not smart, not dumb, not differentiating that money, is starting to step back in. That's the hard reality of this, right? The evidence is, Kev, that despite the fact that price is coming down a little bit, you see these runs where prices are closing closer to their highs. That's what's creating the RSI divergence. And that suggests that buyers are nibbling and starting to step in. So when it breaks that move, from that particular standpoint, this could be a rip your face off rally.
Yeah, it's a possibility. We can't ignore it. It's a great reminder of why we look at charts as frequently as we do, right?
Yeah.
You can often miss these opportunities if you're not paying attention. And it's not to suggest that there's an opportunity here at this moment, but it is to suggest that it may be worthy of a watch list ad based on what we've just covered and discussed on Home Builders. Kind of an intriguing look at things after yesterday's negativity on KBH. As Carol's pointing out, down about 8%. Yesterday's move, not fantastic. Hey, everybody, I see we got a survey opportunity in the chat. If you don't mind, take an opportunity to complete that for us. We'd love to hear from you all. You can just click that link right now, and it'll open in a browser window right next to this presentation window. You can get to it post-show. Give us 60 seconds of your time to let us know your thoughts. We'd happily take them. We love to build those thoughts into our upcoming segments in particular. So any ideas and thoughts you have for us, please feel free to share those. Ben, we got to look at the SOX, the semiconductors, of course.
Yeah, for sure.
I posted this before leaving, Ben. I was really intrigued by what I found. Obviously, a lot of chop in the last 6, 7, 8 months here in the SOX, but the weekly look seemed to be a little bit clearer to me. If I zoom in a bit, we found that 100-week moving average. That's my light green line here. And then we tested that same level around 4,300 on this indice here, Ben. And we've moved off of it. Now, that hammer candle looked really, really good about 2 weeks ago, but we've really not done a whole lot to confirm or improve our standing here after bouncing there. So it's a very important group. What are you thinking about when you're monitoring the SOX here?
Well, I think you've got to look for, again, kind of the break. If you're going to assume that this is maybe kind of a sideways channel that's shaded to the upside, right? I mean, we're kind of cheating that to that upside, and you get these little excursions off of that lower channel line, a resumption or a reclaiming of that middle portion of the channel where you've got your line drawn in there. What is it, about the 4,800 level or so?
Yep, exactly.
I think that becomes the significant element, right? The midpoint of a channel like this, despite the fact that it's been sitting up in that upper portion of the channel and just made a move outside, the midpoint of that channel can act as a pretty strong level of resistance. And once it's broken through, pretty strong level of support. We've seen that. So that would be perhaps that kind of tangible, if this, then that type of scenario. If this breaks that midpoint of the channel, then likely to move back to the top of the channel because these oscillations have kind of gone that way.
Yep, they have. Now we're at a pretty important level here for short-term bulls, aren't we, Ben? I mean, we've broken the 20-day. We've come back to test the 20-day, maybe even test the little bit of a gap level that we've seen over the last week. Kind of an important spot because we could quickly be right back at 4,300 on this one if things don't manage to maintain. The other thing I'm noting is the bear market activity in the RSI, Ben. You just can see it by pushing into a ledge that doesn't get even above 50. And I'll just remind our viewers, when we are in the midst of bearish moves like this, the 50 level or up to 55 even can be the point at which RSI is considered to be overbought. So if you get a rollover in that 50 to 55 zone, as it appears we're getting right now, doesn't mean we can't hold or bounce here, but that doesn't look fantastic. It could very well just be a confirmation of the bearish sentiment and action we've seen over the last month and a half, 2 months or so.
Yeah, and I think this is an area where there has been so much, in individual names, there has been so much leadership. We've seen some rotation out of there. We're seeing eventually, I think, from a technical perspective, there will be a rotation back into some of those names for the simple fact that it always comes back down to technology, right? And technology is going to rotate back in place, and regardless of what the technology is, whether it's AI, whether it is nuclear power to support that space, technology is not going away. Chips aren't going away.
No.
We're going to stop building chips because there are tariffs on the horizon, right? I mean, for crying out loud, let's put this into perspective,
Yeah. Yeah, that's exactly the hardest part, though, Ben. Obviously, not all of us know the fundamental approach or can put together the numbers that this makes sense. This is why we see this stock trading at this level, because expectations are lower and whatnot. Not everybody's going to be doing the fundamental level of review necessary to really gain an understanding of what price action can validate, or what the balance sheet validates in terms of price action. So, which is a hard thing for a lot of traders.
For sure.
Certainly a hard thing.
You know what, Kevin? I've got a potential solution for this, right? To potentially kind of solve some of that problem. And I call it, and some people have heard me do this before. If you've been in one of my live workshops, I've talked about this. It's called the left thumb test, right? Take out your hand, your left hand, and you put it over the top of your computer, your laptop, and you put your left thumb over the symbol up there at the top left-hand corner of the chart. And so now what you've done is you've taken out the story, right? You've taken out all of the news and the social media posts and the hype and all of that other stuff, because now you don't care what the symbol is. You're simply looking at it from a technical analysis perspective. You say, hey, this is a pretty solid bounce off of a support level, and it's breaking back, showing a little bit of weakness, but there's still some potential, as opposed to, semiconductor, AI, it's all gone. That whole thing, right? Get rid of the story sometimes helps to refocus on the technicals.
It makes it a little easier for us as humans to manage. Maybe we can get bogged down by all the headlines. Yep. Obviously, it's real easy to do, of course. Ben, I wanted to look at just a couple of sectors before I wanted to comment on a couple of stocks that got downgraded today. But really, the ones I wanted to make note of, discretionary has been pushing higher. Again, interestingly, right into that same 200-day moving average once more. Everything that we've covered on a lot of these rallies looks similar here. Into the 200-day, a little bit of a pause, fish hook to the downside, right at about the 50 ledge on RSI. Some of this stands out to me, Ben. How about you?
Yeah, it absolutely does. I think you're seeing the same kinds of things, right? You're seeing the same push down. Now there's probably a couple of reasons for it, right? One, and I'll just say this kind of just in general terms, a push below the lower reversal line on the RSI, coupled with the break above the 200 period moving average, is for many algorithmic traders and algorithmic trading systems a strong buy signal, right? A reversal into oversold, and then coming out of that range with the corresponding break of a 200 or a significant moving average becomes a situation where buy flashes, right? Now,
right.
Maybe I'm in a boy band here, but and I'm not saying that is the signal to take. I'm just simply saying that may be one of the reasons why we're seeing, again, some of this strength here, or have been seeing some of this strength in the last couple of days.
Yeah, perhaps. The other couple of things that were notable to me, at least in terms of the chart itself, communications had a nice little breakout there yesterday. Yep. Meta made a nice little bounce, and you've seen the action here above the 20-day. Again, I don't think I'm sharing anything that's any different than what we've already covered, Ben. A lot of recapturing of 20-day moving averages on indices as well as sectors, and yet, again, we got to stay disciplined to our strategy and approach, don't we? Because it can be really easy to get head over skis here earlier than we ought to.
Yep, I agree. I'm the drummer in a boy band, says Rob Indy. Okay, I'll take that. Yep.
Ben's got jokes, everybody. Ben's got jokes. Just be aware.
Nice.
Okay, I had one. Let's see here. Let's look at tech real quick. Off 1.25. So again, very reminiscent of the action in the Sox today, Ben.
Yep.
Not ideal. 2 days above the 20-day moving average. We're bringing the so-called Horner rule into play again. The idea being just looking for confirmation, defining what you think is confirmation for you, and then adhering to that as much as you can. So, is today going to hold the 20-day moving average on tech? Perhaps, but I'm sure the semis will have a lot to say about that, Ben.
Yeah, for sure. I think the semis from that particular perspective, playing back into information technology, you're going to see some rotation. I know we're staying here on the indexes, but can we just diverge for 1 second and take a look at Apple really quickly?
Yeah, sure.
Because you think about kind of the core of information technology. Well, again, to use a pun here, but Apple has kind of been that perspective. And again, I talked about this with Nicole the other day on the network, that this has kind of been the piggy bank for a lot of tech investors, right? So as Apple has started to rotate down, they've been selling positions, and you can see that in the push to the downside without really pushing down into that lower reversal zone and rotating some of that money into other opportunities. Now, what I think you're seeing here, Kevin, after that little push down into the oversold line on the RSI, is that investors maybe are starting to come back in and kind of reload their strategic Apple reserve, if you will, to reload in tech in a name that they feel potentially comfortable with, right?
Well, I think you may very well be right. I mean, I think that ledge here at 220 was nice to get back above. You can see that, the action from Monday kind of led to a follow-through day yesterday. The issue I have, obviously, is the month about a month now below the 20-day moving average. That's about halfway to the window of time that the pullback could be consistent. So about 4 to 6 weeks is often a time frame for consideration. Not a shock to see a little intraday pause at the 20-day there, but obviously closing above the 20 would be a nice little step in the right direction for Apple, and certainly would be beneficial to tech as well. But again, below the 200-day, it's getting a little long in the tooth now, Ben. We may continue to see some chop action in not just Apple, but a few other areas of the market here as well. I did also, Ben, note that we've seen energy push to recent highs. Thought we could look at that before wrapping up with some stocks in the news. And boy, this looked different when I pulled it up pre-show. This was the level I thought maybe we're going to pause at, but no, oil seeming to rally off of this and continue higher. Ben, I thought for sure we would see oil actually manage to settle out a little as some of the uncertainty in the conflict in Russia-Ukraine seems to be quieting, so to speak. And yet that's not what's happening in price action.
Well, no, because here, and part of that challenge, and again, is going back to that fundamental story, right? Because as Russia/Ukraine settles, what's getting upset on the other side, and that's Venezuela. And remember, Venezuela produces sour, heavy crude, which is what our refineries here in the U.S. are designed to refine. Strangely enough, the West Texas light intermediate crude that we produce out of West Texas and in other oil fields here in the U.S., we sell that off because we can't refine it here. We import heavy, sour, waxy, yucky, smelly crude from other places, like the eastern Uinta Basin from here in Utah. I mean, we have trucks full of heated crude coming to the Wasatch Front on a regular basis. You know that coming, from Colorado, because it's the same kind of stuff. So as Venezuela heats up from a geopolitical standpoint, that's going to push crude oil prices. That's going to push energy prices higher.
Well, it looks like a bit of a breakout now, Ben. If you've been long energy over the last month, 3 weeks to a month, this level might be one against which to base some exit strategies, meaning if you are wanting to take profits, a move back below that white line at this level around 717 would be an area where some traders might take a little off on some short-term weakness, just pat themselves on the back for a trade well made over the last 3-4 weeks here, perhaps. But if nothing else,
a little bit of a hidden bearish divergence there, Kev. Look at that on that RSI.
Yeah.
you've got a lower high on the RSI relative to the last time it touched that resistance level that you've drawn in there, and now we've gone higher, so we've got a higher high on price, but a lower high on RSI. Slight and kind of embedded, but not. It could be enough to kind of provide a little bit of a drag here at this point.
Yeah, agreed. All right, Ben, a couple other things I wanted to point out. Number one, we talked about semis a bit. Micron Technology got downgraded this morning by China Renaissance analysts. They downgraded Micron to hold from buy, $84 price target. The thing that I just wanted to point out here, Ben, was the action we've seen. It's pretty kind of obvious price action here, Ben, with Micron dating back to the summer of last year. It's been pretty rangy, but also look at the consistency. Let me just clear these lines real briefly.
Yeah.
And just look at the 200-day, how it has been a magnet for rejection.
Yep. Hits it and pulls back, hits it and pulls back, hits it and pulls back, as is indicative of a channel. And eventually what we're going to see happen here, if this sideways trend continues, is that 200 period is going to normalize with your 100 and your 20, and they're going to kind of go sideways. As a matter of fact, Cameron, just a couple of weeks ago, I know because I did the chat for this class, in his Getting Started with Technical Analysis and Advanced Charting Techniques, I think maybe it was webcast, talked about the ribbon study, which is and you don't have to put it on there. Go back and find Cameron's webcast and look for that. But the ribbon study is simply multiple moving averages of simple kind of geometric increments, and when those all start to line out and you get this big fat line and they're all together, that's an indication of sideways movement. Doesn't persist for very long. So that's the thing, as that 200 gets near the 20 and your 50 here, Kev, that's where you could potentially see some movement in volatility, right? Because low volatility begets high volatility generally.
Typically, volatility, mean reverting, always.
Yep.
I did find that conversation, so I went ahead and posted that in the chat for you, everybody. If you wanted to watch Cam's ribbon class there, it's the link that's right in there, so check that one out. And then the other one that was downgraded by Susquehanna today that I wanted to mention was JB Hunt. And I have to bring this one up, Ben, because it's a trucker. And what do we know about trucks? Well, they move things across the country, very obviously. But in instances where trucking and transports aren't doing great, well, it's really hard for the overall broad market to do great. And you look at JB Hunt downgraded to neutral, had previously been positive at Susquehanna. I mean, again, hey, thanks for the downgrade. How about 50 points ago?
Yeah, exactly. And you can see this kind of, again, 200 period, your 100 period moving average, 50 period moving average, that's your purple line, has been acting as that resistance level, kind of as this rolled over. And now as it start to steepen, your 20 periods beginning to act as that resistance level as well. And truckers, boy, the trucking industry is a weird place, especially when you start to think about labor issues and you start to think about moving goods and higher energy prices, right? So a bunch of challenges going on here with trucking.
Many challenges. Last note, though, as it relates to this, Ben, it's down, 0.25%, but it was down much more off the open. So it's actually reacting favorably. Well, we'll see if it can recapture that 20-day moving average. We've been below that since what appears to be late January, early February. So clearly the 20-day needs to be recaptured here on JB Hunt. But it's in a downtrend. And, the reminder I have, Ben, is it's really hard for the broad market to continue to do well and make new highs if transports aren't participating. It's a really
Dow theory, baby,
indicator, right?
Yep. Dow theory goes back to that, right? When industrials and transports are moving higher, that's a bullish sign for the market, because at the end of the day, things need to get made, whether it's electronics or technology or batteries for your EV or wellheads to drill your oil, and they need to get moved to market, period, in the story, right?
And just to wrap things up, Ben, there's your Dow theory conversation. I got the industrials on the left, weekly chart, transports, weekly chart on the right. Ben, we prefer that these are working in concert. So we have at least a heads up. We have something to pay attention to. We have to make note of it. Transports below the uptrend line, well below the uptrend line. industrials giving you a bounce. It's a mixed bag, Ben. That's the best thing we can say right now.
Yeah, airlines have been a big part of this. They've gotten whacked, but the truckers also playing into this, and trains too. But it'll be interesting to see what happens here in the next little while, Kev.
It sure will, as always. Ben, love having you on, man. It's been too long. Great to have you here. Thanks for sharing your thoughts, sharing your insights with our viewers today. Big thanks to Cameron May in the chat. Again, we had that opportunity for a survey, everybody. If you don't mind, we'd love to hear from you. Click that link and give us your feedback. You can follow the three of us on X, Cameron May CS, Ben Watson CS, and Kevin Horner CS. We would greatly appreciate that. And if you like today's conversation, hit that thumbs up button down below for us as well, everybody. Really appreciate you joining us. Really appreciate you engaging with us in the chat. A fantastic discussion today. We hope you have a great Wednesday, everybody. We look forward to seeing you again real soon.